What if the dollar's dominance is coming to an end? How will this impact global trade? And why is Saudi Arabia making headlines with China and BRICS? In today's video, we dive into the recent developments that have sent shockwaves through the financial world. In the past week, two significant events have shaken the foundation of the US dollar. First, the announcement of a new China and BRICS payment system aims to challenge the US dollar's supremacy in international transactions. However, the more shocking development came on June 9, 2024, when Saudi Arabia ended its 50-year agreement with the United States to export oil exclusively in US dollars. The Crown Prince of Saudi Arabia has decided not to renew this partnership and will instead open Saudi Arabia's lucrative oil trade to other countries and currencies. For the past 50 years, the US has mandated that oil be sold exclusively in US dollars, elevating the dollar's status as the world's reserve currency. This decision has been one of the most lucrative for the US government. But now, a world where America is the sole superpower is officially over. Earlier this week, Reuters reported that Saudi Arabia has joined China's central bank digital currency project, signaling another step towards less of the world's oil trade being conducted in US dollars. U.S. Congressman Thomas Massie recently appeared on Tucker Carlson's podcast, providing a candid breakdown of what's happening with the U.S. dollar. According to Massie, the reliance on the U.S. dollar as a reserve currency is dwindling. Before the U.S. sanctioned Russia, 70% of their transactions were in U.S. dollars. After the sanctions, this number dropped to less than 20%. Ironically, every time the U.S. introduces new economic sanctions, it moves the world one step closer to de-dollarization. A similar situation is unfolding with the U.S. government's microchip battle against China. The U.S. doesn't want China to access America's best microchips, so they impose sanctions. In response, China invests in its domestic microchip industry, quickly closing the innovation gap. The best thing that happened to China's semiconductor industry was getting sanctioned by the U.S. government. This forced China to change and get stronger. If the U.S. government continues to weaponize the U.S. dollar and enforce sanctions, it opens the door for larger problems. It sends a clear signal that the dollar is not safe. The dollar is the reserve currency because it's perceived as a safe haven in a stable country. But weaponizing the dollar undermines this stability. We see this unfolding in real time. Earlier this week, President Joe Biden and French President Emmanuel Macron agreed to use the profits of frozen Russian assets to send additional funding to Ukraine. This move violates international law and exposes how much Western leaders are at odds with their populations regarding Ukraine. Last week, the Institute of Global Affairs published a study revealing that 94% of Americans and 88% of Western Europeans believe NATO member countries should push for a negotiated settlement in Ukraine. However, elected officials have other plans. One recent congressional action was passing the Repo Act, allowing the seizure of all Russian sovereign assets in the US. Much of this is treasury debt that Russia agreed to buy to hold dollars. When countries see that their money is not safe in the US, they will be reluctant to buy us debt. This weaponization of the dollar makes other countries wary of holding too many dollars. China, once the largest holder of US Treasury bonds, is now offloading these debts in exchange for gold. China understands that it could be a future victim of US sanctions and is preparing accordingly. China has shifted its strategy, reducing its US Treasury holdings and increasing its gold reserves. This move aligns with the BRICS announcement of their own payment system, further reducing reliance on the US dollar. At the 2024 St. Petersburg International Economic Forum, Russian President Vladimir Putin outlined the future of global trade under BRICS. Over 177,000 participants from 130 countries attended this summit, signaling that Russia is not as isolated as Western media might suggest. Following this summit, Russia held another meeting with BRICS ministers to outline future goals. Three main takeaways emerged: reforming the global financial system, supporting Palestinian statehood, and ending unilateral coercive measures, which implicitly target the U.S. BRICS aims to create an independent payment system free from U.S. sanctions and political pressure. Saudi Arabia's potential full BRICS membership later this year would further shift the global economic landscape. By opening its oil trade to more countries and currencies, Saudi Arabia aligns with the growing sentiment for economic freedom and equal treatment in global trade. This shift away from the US dollar is gaining momentum, putting pressure on the dollar and benefiting industries like gold. The changes we're witnessing signal a significant shift in global economic power. BRICS is gaining momentum, and the US dollar's dominance is under threat. As these trends continue, it's crucial to stay informed about their impact on the global market. If you found this video insightful, please like, share, and subscribe to our channel for more updates on global economic developments. Thank you for watching.